Hello, fellow traders. 'Tis I, the Rumpled One. It's Tuesday, August the 21st, the year 2018. Let's talk trading. How to fix. It's kind of funny how things seem to just come in bunches. What I'm talking about right now is I've I think I received about two or three emails over the past few days about how to fix, my trading, how to fix losing trade, how to fix. I don't know if these guys copy off of each other or what. So, but I guess you could say I'm copying off of them because I'm talking about how to fix. And I find it kind of funny because sometimes they're talking about what indicators to use, and sometimes they're talking about you, the trader. And the ones that talk about you, the trader, I think those are the ones that are more accurate. They're closer to the crux of the issue because once again with trading, I mean, once you put the trade on, there's nothing you can do but control your loss. I mean, we talk about it, this screen right here. We talk about the money and risk management. You put the trade on, all you can do is control the loss. In other words, you put the trade on, it starts going against you. You can say, well, if it goes against me, I'm down $100 or I'm down a 0.5% or 2%, I'm exiting the trade. I'm not willing to lose a penny more than that. And that's the only thing we can control. We ride the trade up a little, down a little, up a little, down a little, and hopefully up a little more, up a little more if we're long, or down a little more, down a little more if we're short. So we have an opportunity to take profit. That's because that's what we want to do, is we want to take profit sometime. But all these guys talking about fixing this and fixing that, I just really find it amusing because main thing is what they're trying to do is fix their bank account by extracting money from you, the trader, because you're going to buy their book, their indicator, their seminar, blah, 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 right? I really find it amusing. It's just like those guys selling the latest and greatest, indicator or EA that's going to, make you all this profit. I mean, because usually the skeptics will say, well, if it's gonna do all that, why don't you just use it yourself, and why are you trying to sell it to me? I mean, that's why one of the reasons I don't sell indicators. I write them, I put them out there. Yes, I accept donations. We all know that. And the reason for that is because there's so many what's out there that they don't deserve, they like to run me down, so they don't deserve to get my code um just for the download. So, the people who support me in the sense that they appreciate what I do and say, hey, here's I'll donate to the cause. Those are the ones that get, some of the really cool indicators that I write. The other ones are fine, like TROHL5. I mean, if I could only have one indicator, that might just be the one I want. Or, some of the ones I've modified, like the 3LZZ. Um, so, horizontal line, that's my favorite indicator. I don't really need anything other than that. The rest of it, a lot of times are just statistical analysis. But, once you do it once, the frequency distributions and all that, they really don't change too much. You can watch them every day or every week or every month. But for the most part, they really don't change, because these currency pairs, they pretty much exhibit the same behavior over and over. It's like stocks, they can run hot and cold, and somebody, bunch of people are buying this stock, and then all of a sudden now they're all buying some other stock, so the volatility and the range starts to dry up. So that's why you have to make sure your stock is still a cow if you're trading stocks. You know what I'm referring to, milking the cows. But anyway, back to the main point, how to fix things. You fix things by identifying a problem, and then you work on one thing at a time. Then once you fix that, you move on to the next thing. And so we pretty much, as traders, we pretty much know where our weak points are, whether or not you're trading too heavy or too much, or you're not putting in the stop losses, or you're not following the plan. You don't need to tell me, you don't need me to tell you or anybody else to tell you what you need to do, because chances are you know exactly what you need to do. Now, whether or not you do it, that's on you. And you have to wonder why you're not doing that. So, anyway, let's go ahead and start looking at the charts. Okay, dollar yen once again is inside the lower monthly wick zone right there. And we're in the lower weekly wick zone. Oh, and we only have one unfilled gap. So, traders, I show you this every week. Whether or not you take advantage of it, that's up to you. I can't come there and click the mouse. And let's see, we see dollar yen's making a nice little recovery here. We broke through yesterday's low out of that lower wick zone, but now we're turning around and going up. So tomorrow, look for a continuation trade here, especially breaking that today's high. And as far as the ranges, 1, 2, 3, 4, 5 over 100 yen at a respectable 72 pips. But you can see euro yen's over 109. I'm really thinking I might have to switch back to the euro yen just because of the extra volatility there. But the dollar yen just moves so methodically. It just really steps, as you can see in this picture. I mean, that just looks so methodical. And you see here, you had a trigger there. You should have taken profit somewhere down here. You had an entry here, or actually maybe you had an entry here and there. If you were placing your stop right at that open, you may have stopped out here. But the rest, you can see profit to be had. And there was, we like to always, go toward the pivot, fading the pivot. Pivot got taken out. Rat zone, put in a lower, now upper. So red rats looking to trade to the short side. And you can see here we took out the pivot. There's the daily R1. There's the weekly pivot. So you pivot traders, that's what's happening. And once again, we took out the pivot. You can see yesterday and today. And you price action traders with the horizontal lines. Okay, here we go. 3 ball at the bottom, green at the line, go long. 2 ball at the top, looking red at the line to go short. It's so simple, right? And once again, trading at the previous day's high, open, mid, close, and low. There we have it, which can also be the wick zones. Same 5 lines here. You can see as a wick zone trade, in the wick zone, out of the wick zone, in the wick zone, out of the wick zone. Once again, 70 to 77% chance price leaves the wick zone. You always trade exiting. It is a breakout trade. And with the holo right there, we had a nice short coming in, picking up a handful of pips. Inventory reduction bars. Here was a trigger line, a long trigger. There was a short trigger and it reversed, so that would have been a loser. Right here, we're hitting that long trigger line for a third time. Would 3 be a charm? or do you not want to go to the well too often? And daily, weekly, monthly, open, high, low of the previous daily, weekly, and monthly. You can see here crossing above the daily low and the weekly low and the monthly low. Taking those trades, you could have stacked on the trades if you wanted, or depending on what time you jumped in, you just have a single entry. And right here, we've got the tick chart. As you can see, we've got about what? Oh, prices moved about 5-6 pips maybe. 5 pips. Not much action here, but you can see the bid got above the valley of the ask and has continued upward, and we're about plus 4 pips on the bid. And the Einstein line you can see here, open up the portfolio at this level. There was what, a pip or two to be made here. And you can see here prices just kind of waffling. So taking these trades, you're just going to maybe grab a pip or two, but you can trade heavy and take money away. And let's see, somebody wanted me to show them about doing breakout bars. Let's see if I can knock that out real quick. We got the indicator, we got the dashboard. They were wondering how to use the breakout bars. Put this in, I don't know, column 15, indicator name, breakout bars. Let's do H. Let's just do current period. Now, we want to have breakout bars between, I think they wanted between 2 and 5, if I remember correctly. Let's see if I did that right. And I think we might have to put a threshold in there. 1. Okay. Bar number equals 0. We've got to go back a bar. Error message coming up. Where'd I go? Where's the break? There they are. Bar number 1. And so if we look at the euro, you see it popped out of there. And so that's how you set up the breakout bars. And I think they wanted me to do a template for them, so I will have to do that. So, fellow traders, how to fix. You need to identify what needs fixing and then fix it. And I don't have to tell you what you need to fix. And so all these guys out there, how to fix bad trades. I mean, you know what you're doing. You're either not following the plan, you're rushing in, or you're rushing out, or you're just airballing. I mean, it's just that simple. I mean, you're not doing your homework. You know what you're not doing. You know exactly what you need to fix. Nobody has to tell you. So, I want you to always remember and never forget, it's not what you trade, it's how you trade it. So let's all go drain the banks.